Good morning, and welcome to the September edition of Treasurer Dale Folwell's Ask Me Anything Media Availability. Thank you all for joining us on this rainy Tuesday morning. Without further ado, we'll go ahead and get started. The Treasurer would like to begin the call with a few words. Treasurer?
Thank you, Frank. Thank you all for participating. I know there's a lot of news that's going on right now, and we appreciate your time. We have a lot of, just a couple of things that have happened since our last call, and we'll have a lot more happening next week, but just wanted to thank all of our state employees who really are the first responders in many different respects, and who, with all of the tragedies that are going on, both those that are happening in North Carolina, and then we have people obviously on the road in other parts of the country to help others. Since our last Ask Me Anything call, we've had our press release go out about our statistics and metrics regarding our retirement services division. At the end of the day, the Treasurer's Office is in the check delivering business. We spend about $750 million every 30 days in retirement benefits, medical benefits, pharmacy benefits, unclaimed property, and the like. And we just had some incredible metrics that came out as far as our being able to turn around retirement papers in the shortest period of time ever in the Treasurer's Office. This is really important to our retirees. June is like Christmas for our retirees. A lot of people make decisions to retire at the end of their careers at the end of the fiscal year, which is June 30th, and we're very happy that in some instances we were on average able to get those down to 7-day turnaround time. So that's remarkable. Hats off to our retirement division. And with that, I'll be glad to answer any questions you might have.
Okay, we'll begin with Dan Way with the Carolina Journal. Dan?
Yes. I'm wondering, with all of these hurricanes and everything that are going on right now, we're looking at hundreds of billions of dollars in losses and so forth. Obviously, insurance companies are going to be picking up a big loss on these things. So I'm wondering if the state investment portfolio is going to be impacted at all by that. I'm assuming that there are some investments in insurance companies and so forth and other investments that might be affected by this.
Great question, Dan, and I can tell you that as far as investments are concerned, generally speaking, it's rumor followed by news, and unfortunately it's sort of perverse, but oftentimes when these kinds of tragedies hit, there's financial implications for these insurance companies, but in many instances some of the insurance company stocks actually rally because they see that there will be an opportunity based on what's now a new risk adjustment to price their business accordingly. We have not seen any remarkable changes in our portfolio values associated with this. I will tell you that the state does own about $800 million worth of timber that stretches from Washington, D.C. to Ponte Vedra Beach, Florida, that's been in the doldrums for about 12 years. So obviously we hope that people get their lives rebuilt, but just to say that the pension plan in North Carolina has the wood if anybody needs any.
Well, conversely, I'm wondering, with the stock market having rallied since the beginning of the year, President Trump's taking a lot of credit for that, but has there been any windfall at all for the investment that you have?
None that we're seeing. We do think that these storms have had maybe some impact on the Fed meeting next week. There was some anticipation of something possibly happening with interest rates next week, which has a big impact on the investment portfolio, but we think that with what we're hearing about the damage from Houston eastward, that the Fed's going to have a meeting where nothing really is announced. So we're staying the course as far as the investment portfolio is, and nothing big to report.
Okay, thank you.
Thanks for the question.
And on a note, this is Hazel Bradford of Pensions and Investments.
Yes, Hazel.
How are you?
Good.
Do you think if they did do something, if and when they do something on rates, what will you do? What will you think about adjusting on your portfolio?
Well, it's hard to get into on a phone call, but I think most of our listeners are old enough to remember a period where, well, all of our lifetimes where interest rates were higher than they are now. And so as it relates to your question, Hazel, when you invest in any kind of fixed income instrument, whether it's a certificate of deposit or a treasury bond or a corporate bond, when interest rates are this low and interest rates move up, when interest rates were 8%, this semi-annual interest payment on that, where you were able to invest that at higher rates of return, that helped you sort of cushion the shock of the value of your bond falling during that rising interest rate environment. Unfortunately, with interest rates being this low, there is no cushion there. That when interest rates do go up, the price of that bond goes down, and those interest payments on a compounded basis just don't have a big impact. So we are still very high in as far as investment quality in our bond and fixed income portfolio, and we're still fairly short in terms of our duration or the average length to maturity of those bonds.
Thank you.
And I will add, Hazel, and I'm sure this is true for a lot of your other folks that you talk to, because you have a national coverage responsibility, that we're seeing some inversion going on. Our short-term investment product is yielding on a mark-to-market basis, is yielding more than our fixed income product is, and I'm sure you're seeing that in other funds across the country. Go ahead, Hazel. I'm sorry.
That's it.
Okay. Thank you, Hazel.
Thank you.
Hazel, thank you for joining us. And
Oh, actually, no, I take that back. I have to ask about the fee campaign. Is that still going on? Are you still calling managers?
Yes. No, we completed all the manager calls. Now, what we're doing now is we're actually signing amendment agreements to lower fees, and that's still going on. And I'm starting to learn more about the fee structure in terms of what somebody actually calls a fee and what they don't call a fee. And we'll have more to report on that as I get deeper into the portfolio. But fees continue to go down. We're actually not just talking about it. I'm actually signing the amendments with the counterparty signing the amendments in that respect. So we continue to make progress on that. And as I've reported to you individually and to others on this call, that our focus will continue to be diligent about the fees, but we'll have to start really putting our focus into asset allocation. And we just reported a good earnings year for the fiscal year ended June 30th. It wasn't as good as a lot of the pension plans that are equivalent size of ours. So focusing on asset allocation is going to be an important function of the investment management division over the next 6 months.
Thank you, Hazel.
Thank you.
Ree Rao of Pageant Media.
Hello?
Rhea?
Yeah, hi.
Hi.
I just wanted to ask, this is more regarding negotiating fees with your asset managers. I noticed that, Treasurer Folwell, you've really pared down fees over the past year or so. And I just wanted to know what sort of trade-off does that come with? Like how is the system incentivizing asset managers?
Mm-hmm. Great question. In some respects, for example, like the amendments that I signed yesterday, one of our biggest money managers, there's no change in asset allocation. There's no change in managers. The fee was just dropped, pure and simple. So as a fiduciary, I had the responsibility to be loyal to the participants, but also exercise duty of care. And duty of care means, to me, is to make sure that if we're paying fees, that we're getting value to our participants. So we don't cut fees for the sake of cutting fees. We cut fees because that we have managers who have greatly underperformed their benchmark, We have managers who the value that they bring does not offset the fees that they're charging. We don't cut fees for the sake of cutting fees.
Okay. But how do you incentivize, things for managers? Do you have like a system? Are you revamping the fee structure?
Well, the agency that I inherited last year reported paying out over $600 million in fees. I don't think that's all-inclusive number. I think it's actually higher than that. So I would say that when those fees have gone from $50 million to over $600 million in 16 years, that we still have an enormous amount of incentive built into these contracts.
Okay. Okay, thank you.
Sure. Rita, any other questions? Nope. Matt called.
Actually, there is one if you have a minute.
Sure.
Could you explain a little bit more what you mean by starting to be diligent about asset allocation? Does that mean you're going to take it apart and put it back together, or do you have some ideas?
Thank you for allowing me to clarify this. The investment management division under the previous and the current investment officers have always been diligent about asset allocation. It's just something that I have got to refocus on myself in partnering with them.
Oh.
So they've always been diligent about it. I get a report every week about the floors and the ceilings, where we are in that process, and so they are extremely diligent on it. It's just something I need to turn more of my personal attention to.
Oh, okay.
Yeah.
And then speaking of managers, who is replacing Mr. Singrist?
Oh, thank you. We have appointed two interim directors of the investment division. One is Jeff Smith, who is as a 25-year employee of the State Treasurer's Office, who already has responsibility, including our STIF, short-term investment fund product, responsibility for about $40 billion of the pension plan. He and Chris Morris. Chris had a long career with State Street. I think he's been with the State Treasurer's Office almost 10 years. So Chris Morris and along with Jeff Smith are co-leads of that division, and so we're going through that process. Let me strike that. They are the interim directors, and so we're in constant contact every week, just like Kevin and I were in constant contact.
Okay, thank you.
Thank you, Hazel. I guess this is a wrap for September's Ask Me Anything. Please remember that a podcast will be available on our YouTube site later today. Thank you all for joining us, and have a good day.